Welcome traders to the Thursday Traders Tip, and this week we'll be talking about the two crucial technical skills that you need to perform in the market. So let's get right into it, and let me tell you what these two skills are. The first one, although it seems obvious, is getting to know what are the favorable conditions to your edge, to your strategy. And the second one, conversely, is getting to know what are the unfavorable conditions to your edge. So let's get into a little bit more detail to each one of them so you can get ready to perform the best as you can in the market. So let's start with knowing the favorable conditions to your edge. And this goes beyond, you might be thinking of, okay, I have my strategy, I know my confluences, I know what I need to look for to enter a setup, so I know what are the favorable conditions to my edge. But this goes above and beyond that. It's not only about knowing what are your confluences, but as you gain experience over time, you become a master of understanding what are the favorable market conditions and also what are the most favorable setups that give you better odds of winning and a better performance. So here we're talking about market conditions, market scenarios, but also those A+ setups. It's normal that in the beginning you are not able to distinguish what it's an A+ setup and a B setup. They're all quite the same because you don't have the experience to have a say on what's best and what not. But as you gain experience, you start to notice these special characteristics that give you better odds of success, and then you start to track them, gain statistics about a particular type of setups versus the other, and you understand and realize that your A+ setups, reuniting those characteristics, actually give you better odds of success. And so you're capable of perhaps sizing a bit bigger in those setups, or when those market conditions show up, you are more comfortable and more confident just pressing harder on those setups. And because you're more confident pulling the trigger in those setups, because you feel more confident about them, and you are capable perhaps of sizing bigger, you're also capable of committing to that size from entry to target. So you're more comfortable managing the trade. Now, when it comes to the other skill, which is about knowing the unfavorable conditions for your edge, this is very important. Because the truth is that you might be very good at trading and making money when the favorable conditions to your edge show up, but then if you're not able to sit on the sidelines when it's not your turn, quote unquote, when it's not your time to get in the market, you'll end up giving all the money that you made to the market. I used to say that the quality of your trading performance is as good as your ability to sit on the sidelines. And traders often overfocus on the first skill, and they even think, okay, I just need to know what are the favorable conditions to my edge, and then all the other ones are not favorable. But it's not quite this way, especially for those traders that have this urge to act, productivity, work hard mindset, and when they look at the market fluctuations, it's in of itself a trigger to let them enter the market and take trades off strategy. So these are the type of traders, the impulsive traders, that really need a plan to when not to trade, so they can have more clarity when they need to sit on the sidelines and exercise patience. And this is not an easy task. It's something that you gain with experience. Just like you get to understand what are the favorable conditions, step by step you start to understand what are the unfavorable ones. And they can be related to the higher time frame. Let's say if the higher time frame, the daily, the 1 hour, whatever you use, is consolidating, or price is acting weird, this is like an indication for you to sit on the sidelines because it's a weird price action. Or when the volatility is too high, price is acting weird, like there's a lot of wicks and the bodies of the candles are smaller, for instance, or when the volume is very low. Like these are conditions that perhaps you're not so used to trade in. And many times what happens is that traders insist in playing their strategy in these conditions, and then they end up giving the profits back to the market. I'm sure it already happened to you, and it's frustrating because you're capable of making that money, you had a successful week or even a successful month, and then market conditions change and you have this urge to keep on playing, to keep on making money, to maintain performance and not fall down to where you were. So you want to sustain, and you end up forcing your edge and strategy in a certain scenario that it's not optimal. But this is not the way to go, is it? You might be curious about the ability of your edge to perform in different market conditions, but the way to do it is not forcing it the first time you see it. So if you're not used to the conditions that you're seeing at the moment, all you have to do is, okay, let me save, let me take note of this day, maybe take some screenshots of the price activity on that day, and then when the next day like that shows up, when the same market conditions shows up, you want to record this information. And once you have a lot of scenarios with these conditions, you kind of want to study them so you can gain more confidence about if it's actually worth to play your edge and to take trades on those days. So the biggest takeaway from today is for you not only to get to know the favorable conditions of your edge, but also get to know the unfavorable conditions so you can draw your plan to when not to trade. And with this plan in place, you'll notice that it's much easier for you to sit on the sidelines when it's not meant for you to engage with the market, and that will ease your performance and make those very good weeks stand out. Peaceful trading, Sarah. If you want to get access to more of my content, you can click the link below to become a paid subscriber and become more aware of your blind spots, become a better trader, and reach new highs of trading performance.